The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 16th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is off to a great start of their day. Let's make sure that you and I, that we do all that we can do to get everything we possibly can out of our terrific Tuesday. And let us always remember that the way we do anything is the way we do everything. Something to think about. Now, hey, during the next hour, what I'm going to do is I'm going to share with you extraordinary tools that help us identify where price is headed to. We'll utilize Japanese candlesticks because those are the signals that the bulls and bears leave for you and I each and every day. We'll utilize A to B equals CD patterns because they help us project price. We let the market do 75% of the work for us. We'll utilize all the tools in our tool bag. You may have some of your own that you like to use, and you can share those with us here at TFNN by just simply calling us at 877-927-6648. Internationally, you can reach out at 727-445-1044 out there. And then together, you and I, we can go hunting for bulls and bears. This is Terrific Tuesday. I'm Steve Rhodes. This is, of course, TFNN. And welcome to the show. Right now, Dow Futures. Hey, how about the Dow itself? It's off 5 points. S&P is up 2. Composite up 2. Russell 2000 up by 2 points right now. Gold back $1.90, silver up 2 pennies, platinum down 7, light sweet crude up 49 cents out here. Leading the charge, the upside dollar-wise is Zillow up about $7, up about 5.5%. Salix Pharmaceuticals up 3%, or up $4. Regenerate Pharmaceuticals up 4. Rewalk Robotics up 11%, up $4. Hubble Inc. up $4.50. Pioneer Natural Resources up $3.58. Tesla up 3. Google up 3. Humana up 3. Trulia up $3 as well. Biogen, BIIB, up a couple of bucks. To the downside, Netflix leading the charge to the downside, off about 1.5%, down $7 and change. Copa Holdings cut, paste, and assembles its ticker symbol CPA, off $5, down 4.5%. Wynn Resorts, that's off about $5 and headed lower. VIP Shop Holdings down 2%, off $3. Emerge Energy Services down 2%. Sears Holdings off a couple bucks. Cummins Inc. off 2. GoPro down 2. China Mobile off 2. Las Vegas Sands off a couple. Rand Gold Resources. Let's go check in on Rand Gold Resources. GOLD off 3%, off $1.62. Let's go see what it is headed to. Looks like it's headed all the way back to its swing point out here. The swing point, let me pull this back even further. I must have looked at this recently. There we go. I don't know, why did I choose that? Why did I choose that high volume? I guess I chose that because it was the high volume bar that was sticking out up here. Let me go ahead and erase that, though. Let's just do that. Let's go take a look at Rand Gold. Come on, there we go. Let's get rid of the A to B equals CD to the downside. It has surpassed that for sure. Let's go see what Rand Gold is doing as we speak right now. We're going to pay attention to the current swing point that it is trading into and try to see what kind of release of information. Well, it's not back there just yet. It will be at about $73.39. So far, intra-session low, 73.67. Oh, so close. The actual swing point that I'm looking at, folks, June 3rd. Top of that swing point is $73.99, 389,000 shares. Oh, boy, looks like trouble in River City. We're already doing 245,000 shares, and we are only just, an hour? 40 minutes into trading out here. So Rand Gold looks like that is, well, it's moving into a swing point with accelerated volume. You don't like to see that. Rand Gold takes that up. That says lower prices. Where are those lower prices going to take us down to? Well, there's let me put this on a weekly chart. Let's go see what it's also doing weekly-wise. Now, obviously, we're only at the beginning of Tuesday out here, but I wanted to see what the volume was on the weekly. for this swing point. So you're looking at the weekend of June 2nd, 1.8 million shares. Last week it was able to muster up 3.3 million shares. So you're moving into a swing point with volume. And this week, 838,000 shares out there. So that 838, it's only Tuesday, and you got 1.7 million shares. Yeah, Randgold looks like it's going to bust out that swing point. So what does that set up for GOLD as the ticker symbol? Could set up a run all the way back to January 6th. In the price range of 59.15 to 63.54. Now, it has to bust the swing point here first. Let me pull this back even further. What do we got? That's really all that we got here. We're just dealing with swing points. If we take a look at on the weekly basis, no real A to B equals C to E down pattern. If we just simply take a look at retracements now, we go from the low the week of January 6th up to the high that was placed out here on July 7, 2014. You're going to see it about $70.92. That's your 0.618 retracement level. So I would have to say, if you break the swing point, get below 72.14, forget the 0.618 retracement level, I think you're really looking at 65.76. That is Randgold. GOLD is the ticker symbol. That was the weekly chart that we were looking at. Now, speaking of gold, speaking of mining, let's go take a look at Goldilocks. Let's go see what gold is doing out here. Let's take this off of the weekly. Let's put this on the daily. Let's look at the current contract out here, December. And December, a day to remember. If we take a look at Goldilocks, what is she doing? Well, she's really just testing the swing point that she broke out of, and that happened to be the June 3rd level, which was at 1241.70. Nothing bullish about yesterday's candle. Yeah, it's green, but that doesn't mean anything. That's not a bullish reversal signal out there. That's the weakest of all bullish reversal signals inside of a gold. So it looks like gold itself wants to get down into that December 31st swing point, and that'll take a Randgold with it. That's what's going on inside the Goldilocks. Nothing has changed there. What would change it? Well, prior to some kind of real flush down the toilet out here, probably closing above the 1252 level. So some close above 1252, and Stevie would rethink whether gold has formed a potential bottom out here. If we take a look at, but we're not there yet. Hi-ho silver up 1 penny, so it's trading flat at 18.60. What do we know about silver? Hey, it's in the extreme oversold condition out here. Yesterday a doji candle. Today so far a little bit of a doji. No kind of reversal signal here inside of silver. It is already trading below its swing point here from May of 2014. Looks like it wants a lower price. Gets all the way back likely into the June level, which is right around the $18.50. Is that what I'm seeing? No, I'm seeing 1850 mark. That is where silver is headed to. How about light sweet crude? Light sweet crude, remember, trying to form a bit of a bottom out here, at least according to the work that I do. We're taking a look at the October contract out here. Key reversal session that took place right here, the trading session of September the 11th. Yesterday, that actually may qualify as a hammer candle out there. It looks pretty close to me, but maybe the body of that candle just a bit. Yeah, I'd have to say the body of that candle maybe just a bit too big. Nonetheless, very hammerish looking out there. And what you can see is we had one of my favorite reversal patterns. We didn't get the follow-through on September the 12th, so that always makes it suspect. But we saw price moving lower with less relative weakness out there. Never a good scene. Now, what does light sweet crude need to do to really confirm that the bottoming pattern that we're looking at is actually in place here? Well, let's just go rely on our market profiles. Why not? Let's take a look at 94.21 as being an area that if we can see price get above that level, that's a resistance area. That would be one way to take a look at it. Let's go look at some trend lines out here as well. Let's take a look at the trend line off of the high out here from June 25th. Let's just simply use the top. Since we're using the trend, we're using the actual candle itself. So that's a little red diagonal line also going across my screen. So getting above that level today, that would be above the market profile high at 94.21. That would give us a price $95 or so. So breaking that trend, that would be a way to do it. That is, again, taking a look at the October contract out here. So we're seeing another sign, really seeing two signs. Yesterday was a rejection of lower price inside of light sweet crude. So that may be setting up. You'd like to see it break this trend line, I would say. Channel lines, if I were to try to put channels in there, see where those might line up for us. Let me do this. Let me get that tool out here. I'm going to start with the body here from June 26. Let's see. And that looks like a pretty good channel line right there. Yeah. There you go. There's Stevie's. Shoot, it moved on me. Let me delete that and start back over. It's not that I want perfection. I just want to just have the line and wanted to go ahead and use it. So, again, we're going to start from that body from June 26. That seems to be right about there. See if I can have steady fingers. There we go. So that's the bottom of that's the top of our channel. The bottom I'm not going to worry about so much out here, but we'll just go, that's probably a pretty decent bottom. So now let's try to explode this up just a bit, pull this back. Go ahead and explode it up just a bit out here, and now let's pull it forward. So now what we can see here is price right now. If we use, I'm going to get rid of the trend line just to clean it up just a tad out here. Go ahead and get rid of that price divergence line as well. We know what we're looking at there. Okay, so now as we take a look at light sweet crude, so we had a trend line that we said that it really needed to break above out here. And now as we take a look at this little price channel, we can see the price is bouncing its head right now as we speak, right into a resistance area for light sweet crude. So if it is truly going to change its trend out there, you try saying that 3 times fast. We've got the signals here at the bottom. We clearly have got the signals here at the bottom. So a close above, let's stick with the close above 94.21 as a level to be watching today inside a light sweet crude. We'll check back in on that tomorrow. Let's see. So what else? How about platinum? We haven't looked at platinum here. No, we've got one of our tigers that trades platinum. And if we take a look at it, I think I really need to switch over into the, well, it just doesn't trade that much. So I'm not going, well, let me pull this back. Well, I don't want to use the current contract. Maybe U is not the current contract. Well, that's the problem out here. Let me switch over. Is the I'll do that during a break. So that's September. So I'll go ahead and switch over. Maybe we'll come back and we'll take a look at platinum. Let's look at a couple things here that are moving. Okay, let's take a look here at Apple. Let's go see what's going on inside some of the heavily weighted equities out here. Let's take a look at Apple, gapping down this morning after producing some record sales on their new iPhone 6 and products out there. I didn't read what the Dick Tracy watch was going to do. I just don't see it. The payment system, that's a whole different thing. I buy into the payment system piece of it. I just think what they should have done is just done their own deal and gone away of said the heck with American Express, Visa, and MasterCard out there. That would have been a game changer out there. In any event, that is not what they've done. What has the stock done? That's all that you really care about out here. Right now, it gapped down this morning. It's trading off of its session lows, really moving down into its point of control. This chart here looks more bullish than bearish to me. You know, we had this wild and crazy ride on September the 9th out here. Volume to the upside, volume to the downside, but it wasn't able to take out its market profile low, 97.66. So at this stage here, I have to say that Apple looks more bullish than bearish. To Steve Areno, 877-927-6648. A flat market out here. The Dow up a buck, S&P up 4, composite up 8. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 90 cents out there. S&P's up 360, composite up 7. Before we went to break, we were taking a look at Apple. I had on the daily chart. If you take a look at the weekly chart out here, you'll see on the weekly chart, we know where the resistance level is. Nice big bearish engulfing key reversal session the weekend at September the 1st out there. So what Apple needs to do is to clear the close above 103.74. If it can do that on a weekly basis, it'll continue moving north out here. It has held, even with last week's push down out here, it has held its weekly market profile resistance level out at 97.48. So that alone is bullish as well. So the weekly looks bullish. There's some hurdles that it has to overcome out there, but the weekly looks pretty bullish, and the daily looks pretty bullish as well. Yeah, we've got some reversal signals, no question about it. So we know what the hurdles are that it has to overcome out there. Back to platinum. Thanks to Danny in Atlanta, it is currently the October contract that is the active contract for platinum out here. So if we take a look at it, we've got the weekly chart also up on my screen out here. It's trading into the swing point from December 16, 2013. So it ought to go test those lows out of the 1324 level. Let me take a look at a daily chart, see if there's any A to B equals CD patterns that may have set up along the way out here inside of platinum, and there is. So the A pattern, A, B equals CD pattern on on this. I'm going to start off with the high out here on the trading session of July 10th. That's going to be our A point. Our B point is going to be the low, either the August 5th or August 6th level out here. Small retracement up into a couple of days. August the 8th does a 51% retracement out there. What we can see here is it makes the 1-to-1 A to B equals CD. We never really see a reversal signal, so it goes down to the next floor. Next floor on September 8th, 1-to-1.272. No reversal there. Down to the next floor, and that is the 1.618 retracement level. No stopping there. Aha! Oh, not so fast, as our man Lee Corso loves to say. He did get a hammer candle out here. So it says platinum. It's trying to hammer out a low at the 1356.30 level. No follow-through on that hammer candle. You trade inside the body of that candle, but that's okay out here. If we see a close below 1356.30, if you're long, you are wrong, as we like to say. Of course, what does that really mean? It says you're going to go down to the next level here. In this case, it would be a 1-to-2 A to B equals CD to the downside, 1343.30. But the bulls are out trying to defend the lows here inside of platinum, at least inside of the October contract, out at the price point of 1356.30 out there. Looks like a request inside the den to take a look at Go Pro. So let's go take a look at GPRO is the ticker symbol. Let's go see what GoPro is doing right now. Looks like it moved down, gap down. It's a daily chart that we've got on our screen out here. Not a ton of information for us to analyze, but what we can take a look at is that GoPro has found support at its market profile low. That's at 63.46 as we speak. Volume today, 3.2 million shares here. You do have a key reversal session here yesterday, clearly in the extreme overbought condition. Again, a key reversal session. You need to have three things. Number one, you've got to be in an extended condition. Well, GoPro is, if we utilize our 14-period relative strength indicator. Number two, you need to see a close in the opposite direction. Well, you got that yesterday with one tick below the open. The open was 69.55, but of course you got more than one tick. You actually closed out at 67.20. This is a daily chart that we're looking at. And then number three, the intra-session high and low needs to exceed the prior day. And voila, you got that inside of GoPro. So you got significant resistance up at yesterday's high, 71.42. That's its hurdle, much like we just looked, took a look at inside of Apple, having its hurdle as well out there. But support, this has got support at 63.46. Hey, you break that support level, where is it that GoPro pulls back to? Excellent question. No idea. So what we can do is we can just simply use our retracement ruler out here. That means go from the low of August 8th up to the high of yesterday, and it says, hey, 58.36. That might be a spot. $50.30 would also be another logical spot. And that is in ticker symbol GPRO. Really needs to break 63.46 to get to the bearish side of the market. Now, this one here, as we saw yesterday, lots of high flyers being liquidated to make some room in the portfolios for most of you out there, at least 70% of you that have your money that are being managed by other funds out there through 401ks or what have you. Not a bad thing, but just recognize that that is likely what was going on inside of the market. But this momentum stock here, GoPro, they're not going to sell that at this stage, although it's had one heck of a nice run off of the bottom here at $28. No question about that. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Flat market out here. Dow up 2, S&P up 2, composite up 3, Russell 2000 up 50 cents right now. If we take a quick look at the VIX index here, right now trading out at 1402, made a little bit higher high this morning. That suggests to me that we will see higher highs inside VIX index for the next week or so out here. It could be a couple weeks. So that is not looking good for the bulls out there. Hey, getting below 1288, that would be a whole different scenario out here. But that is not where we are at as we speak right now. If we check in on the summation indexes out here, if we take a look at the NASDAQ composite, of course, we took a look at this here over the course of time. Let me pull this back on my screen out here. Let me go ahead and get rid of the, let's do this out here. Let me get rid of a couple of things just to clean up the chart a little bit, see what the actual, why was I holding that down? Just messing things up, that's all. Don't hold that down, don't hold that down, don't hold that down. Okay, so as we take a look at the NASDAQ composite out here, we can see, if you're watching this on Tiger TV, the very bottom of my chart out here, that happens to be the McClellan price oscillator for the NASDAQ composite. And what we know about it as the price oscillator makes lower highs and price makes higher highs, it eventually leads to a market correction of sort. I'm just taking you back into the December 2013 time frame. We saw that take place. We saw as the NASDAQ was making highs back in March of 2014, what was the price oscillator doing? Making lower highs. As the NASDAQ was making higher highs during the July 3rd, 2014 time frame, what was the price oscillator doing? Making lower highs. Well, guess where we're at now? We have the NASDAQ was making higher highs. What was the price oscillator doing? Making lower highs. Now, the question becomes measuring the extent of the move out here. We're taking a look at the NASDAQ composite. We're taking a look at the daily. The last time, what we saw was really a very shallow retracement, right? That retracement, if we just simply take a look at it from more of a pure standpoint, we use the previous swing point. I would come down to May 15th as that level to the high that was put in out here. Wasn't even a point. Well, it finally made a 0.382 retracement. Finally got down and made that 0.382 retracement. It did that right here, right around the trading sessions of August the 6th, 7th, 8th out there. Now, let's go take a look and see where we're at right now. So it had taken a while to actually make the 0.382 retracement. Let's go see where we're at now by simply coming back into that August 7th swing point up to the high that's put in out here inside of the NASDAQ. That is on September the 3rd. And, geez, we've already done that in basically 2 days. So what does that actually say to you? What does it say to me out here? I'm just going to explode this up on my screen out here. What it says to me, we've been able to make that 0.382 retracement here in just a couple of days, really one day. You know, if you consider that yesterday finally broke through that consolidation level. We saw price get down to 4,500. The 4,500 level, the actual low that we've seen here so far today. Well, I got to turn that on my screen, don't I? Edit this chart. Go ahead and turn that on. That might make it a little bit easy for me to actually see my, there we go. That makes it a whole lot easier. So the actual low that we've seen here this morning, 44.9987, that qualifies as 4,500 to me. So what happens, we make that low. As we were taking a look at the first show, we looked at the 5-hour energy chart. We looked at the 120-minute chart. Both those showed that, hey, we want to see, it wants to see some kind of a bounce here. Well, we've begun to see that. Is this the extent of it? I don't know the answer to that. What I know is we had some other patterns that were completed that said, okay, a little bit of a timeout here. A long way before the composite can get back into bullish territory. What that would require getting the price oscillator at least above the zero line. You're at minus 38.28 as we speak right now at 10:38 in the morning. Getting to that first level, that 0.382 retracement, normally a spot where you start to let folks off of an elevator. Out here, the next floor on the way down is 44.32. I suspect that is at a minimum of what we should see inside of the NASDAQ composite until patterns change out here. But at this stage, that's the pattern, in essence, that is in play. If you take a look at the NYSE, New York Stock Exchange, what did it do yesterday, the day before it made the 0.382 retracement? It has the same kind of patterns out here where it was also making higher highs and doing it with lower price oscillator readings out there, all things that eventually lead to a market retracement and or correction. So where is it the NYSE is likely to head to? Hey, the same thing as the New York Stock Exchange. Very likely 10,768 until we see otherwise. What would be otherwise? Well, in the case of the New York Stock Exchange, that gets the price oscillator above zero, and that ain't going to happen today. There are not enough issues traded, and even for the New York Stock Exchange to completely run the tables to turn the price oscillator and get it above the zero line out here. So what we're seeing right now from the intraday charts is at this stage nothing more than an oversold condition being worked off. And for those of you not short, then it's a matter of trying to identify those areas where you would like to go ahead and put that short position on. But the VIX index really just confirming for me by making just a higher high today. Doesn't even matter to me if it trades a bit lower, that the next move is up probably for the next 7, 8, 9, 10 trading sessions out there. But we'll take things one day at a time. I always just like to just know what we're looking at now. But if the market wants to communicate something different to us, just like in turning the page of a novel, because all we're doing is we're just reading a story. That's really all chart reading is when you take a look at it. We're just simply reading the story of the markets. And sometimes the story follows other stories out there. And then every now and then there's a twist. Will there be a twist with regard to the Fed? Will there be a twist with regard to Alibaba? Will there be a twist with regard to something else that might be going on? I don't know the answer. What we do know is what the charts are doing as we speak right now. So we've taken a look at the summation indexes out here. Let's go take a look at what's going on maybe longer-term basis out here. Let me see. Do I have my monthly chart out here? The answer is, well, I can always turn it into a monthly chart, but here's the NDX 100. Let's take a look at the NDX 100 right now. You can see it's in the caution zone of the Rhodes momentum indicator out here. That's the yellow area. Now, in order for the NDX to actually get bullish, its next buy opportunity, you can see that yesterday we formed what I call my Rhodes momentum trading indicator. That's this little green box yesterday. That says the high of yesterday now becomes resistance. Inside the NDX 100, that price level is 4070.82. And the close above 4070.82, that will go ahead and switch us into a buy mode out here. It is not often, even on the daily chart here for the NDX 100, that you get those green Rhodes momentum indicator signals out here. If we continue to see them, just tells us that the sellers are the ones that are in control. What else do we know about the daily chart here for the NDX? Well, the NDX made a higher high. It did it on September the 9th. That little bear sash candle out there, that was a price relative strength divergent pattern. We're about to see a bearish crossover inside some lagging moving averages out here. Says the next level of support on the way down happens to be the 50-day exponential moving average. That is at 3980.88 as we speak right now. So what we know here about the NDX 100 looks like it has further to go to the downside, much like we took a look at the actual composite itself. That's what's going on the daily chart. Hey, let's go check in on the weekly chart. What kind of signals, if any, do we have in the weekly chart out here? Well, the weekly chart, really not much. At this stage here, the weekly's got no real price damage to it, so to speak. In fact, no price damage whatsoever. You get below 39.65 out here, then maybe it starts in at 39.65. You're going to trade all the way back into the August 8th swing point. Now, they're very close to the August 8th swing point. Getting below 39.65, that would say, from a weekly standpoint, that you would get back and you would test that. But at this stage here, the NDX on a weekly basis, hey, looks pretty darn good. If we go take a look at the monthly chart out here inside the NDX 100, well, nothing bearish about that as we speak right now. Of course, there's a lot of time left in the month. It's only September 16th. And, of course, if we take this back here, what we will notice is that the NDX has been able to get into, it's now rejected, the swing point low for the month of March back in 2000. The low of that trading session is 4049.98. You're now trading at 4032. Hey, you tested a swing point high, you've rejected it. Does that mean anything? Well, no, because it's still a monthly chart that we're looking at out here. But just the point is, if we take a look for damage, we take a look at the reversal signals out here. The NASDAQ NDX 100 has got a long way to go for the rest of September. What has it got to do? I don't even know that that's very good grammar out there, and if it's not, my apology to all of you grammar students. But what we can say this is that if we were to see a close below last week's open, 38.8610, then you'd have a reversal signal. And we haven't seen really a reversal signal of any consequence inside of the NDX 100 on a monthly basis since October of 2012. How is that for running the tables out there? So that's what's going on inside the NDX, which obviously had a weak day yesterday. But let's just always keep things in perspective out here. Now, let's go take a look at something else on a longer-term basis. Hey, let's go take a look at the stocks. Let's go take a look at the semiconductor index. There's a strong like bull. Now, what do we know about the semiconductor index on a monthly basis? Hey, it has not been able to get above its resistance level created by this little dark cloud cover candle from July. You did see that candle get pretty much erased, the monthly chart that we're looking at during the month of August. Nonetheless, it's got to close above the July high, which happens to be 652.28. It closes above that, and it's off to the races. Rhodes momentum indicator signal, the last one being formed on a monthly basis back here in June, and that tells you that substantial strength. When you see the light blue colors on my system out here, it tells you it is just super strong like a bull out there. That's what's going on in the monthly chart for the stocks. If we take a look at the weekly chart here for the semiconductor index, we're going to see here that you've got a potential. No, you've got really a price moved higher. Did it with less relative strength. Gave you. How about that? How about that? Get rid of that. It gave us a reversal signal here last week, the weekend of September the 12th out there. You're seeing a little bit of follow through to the downside. You've got some support inside of the stocks all the way back at that August swing point low. That happens to be priced out at 597.67. So the weekly chart beginning to show some chinks in the armor. However, you need to see a close below 629.84 to start to begin to get excited. And, of course, you want to see a lower close this week inside of the semiconductor index to suggest that lower prices are coming towards us. Of course, you're going to see a turn on a daily versus a weekly sooner, and a weekly versus a monthly sooner. And if you keep going further, you can get an Oklahoma sooner out there. Let's go take a look at the daily chart out here for the semiconductors. Hey, what has it done here this morning? It's run into the 50-day exponential moving average. It ran into it yesterday. That is the thick blue line going across my screen. It still is rising out here. 631.65 is the magic number there. If you're bullish, you want to see that level being held. If you are bearish, you want to see that level breaking down. Of course, what do we have here? Inside of the Rhodes Momentum Indicator signals, well, on a daily basis, it's gotten into the red zone out here. And this is not the kind of red zone, if you are on offense, that you like to see out here, because you don't have the ball. It's the Bears who have the ball when we turn into the red zone using the Rhodes Momentum Indicators out here. What do you need to see in order to get back to a bullish? You got to see a close above yesterday's high. That is at 641.24. That could then set up your next buy. Of course, a continued move lower below yesterday's low out there, 631.89. Not a good scene. Very likely then we'll move down into that trading session from August the 7th. So there's from one of the stronger indices. Of course, the NDX is certainly a strong index out here. Let's go take a look at. Let's go take a look at the financial segment. Let's go take a look at the XLE, that miserable thing out here. Let's go take a look at the energy sector. That is a drag inside the S&P 500. But let's go see what it's doing. Ooh, hey, how about this on a daily chart out here? You had the bulls out. In fact, we've seen some bulls in place trying to get some bullish moves out here. There was a hammer candle on September the 10th out here, and that low was taken out, 93.81. It was actually taken out 2 days ago on Friday. And then, of course, that says if you're long, you are wrong out here. Let's see where that should have taken. And what it took price down to, how about that? The 200-day exponential moving average. Let's go see the last time that the energy sector was able to break through that area. Last time we saw a break of that was all the way back here, looks like, in the January timeframe, January 24th to be specific out here. We saw a break below the 200-day exponential moving average, but that is, might have to take the chart back even further than that. That so far is what has held price. And we've seen the bulls over the last couple of days out here try to flex their muscle. They're flexing it again today. A close above the high from two trading sessions ago on Friday, which is 94.79. You're at 94.94. That actually gets you into buy mode territory. I've got this here activated so that it shows me intraday what is going on. That has not taken place here just yet. But the reality is the energy sector is going to need to see a whole lot more than just the energy sector itself pulling the market forward. It's going to need to see the technology sector, XLK, and so forth. So on a daily basis, we know where prices stopped inside of the XLE and why. Now, let's go take a look at the weekly chart for the energy sector, see if there's any kind of meaning out here. The energy sector, okay, so on a weekly basis, you got one of those Rhodes Momentum Trading Indicator signals that says you need to see a close above last week's high, 96.68 on the weekly chart in order to start to get into perhaps bullish formation. Let's finish this off by taking a look at the monthly chart for the energy sector out here. Monthly chart still looks actually pretty good. Not too bad. You're still in that light blue sky territory out here. However, you get a close this month below the June low out there at 94.92. That starts to change things a bit. 877-927-6648. This is Steve Rhodes. This is TFNN. We've got the Dow up a total of $3.89. That's a whopper. S&P's up 4. Composite up 4. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 6 now. S&P is up 4. Composite up 4. Russell 2000 up 80 cents out here. And, you know, our man Basil Chapman, he's going to be up next. It is Terrific Tuesday. That means we got the Options Hour. Then we've got Daryl Martin, David White, Tom O'Brien show from 3 to 5, and Andy Heck taking us home from 5 to 6 out here. And they want to put together a number of different trading tools out here. If we take a look at this chart right now, this just happens to be a 10-minute chart here for the ES Mini. Now, it made a couple of our favorite patterns out here. Let's take a look at the low that was being made out here this morning. And let me just do this here for a second. And so if we take a look at this low out here, you can see it made one of my favorite patterns. That's where price is being pushed, but doing it on less weakness out here. Taking a look at that pattern, then forming a bullish candle out here, which we did. This a bullish engulfing candle on a 10-minute chart that took place right at 9:30 as the market was getting ready to open. Then what we have here, we've got price getting above our TAS signal boxes out here, getting above resistance at 1974.25 out there. If you take a look at as that market was making a low, making that price relative strength divergent pattern out here, what did it do? Got down to a trough G, that seventh wave moved down on the way down out there. So it had just a little bit of everything. At this stage here on the 10-minute chart, we've seen a nice move here. May have some more move in it, but that's what was going on the intraday time frame out there, and that's utilizing all of the wonderful tools that we have here at TFNN.com. So make sure you stay tuned for that. In summary, what do we have that's really going on inside of the marketplace as we speak right now? Look, we've got, as I said earlier, you've got the summation index inside of the composite out here. That is telling us until this gets above that zero line, what we should expect is lower price. If the inside the New York Stock Exchange, price had gotten down yesterday and the day before down to a reading where the market had been oversold. That meant that we needed to see a bounce. We're seeing that bounce take place. It is not much of a bounce. That tells you a whole lot. We saw the VIX index here earlier in the day. The VIX index make a higher high. Basil will be on, and maybe he'll tell you, but that's a sign of one of Basil's instant restarts that could be taking place as we speak today. That says that for the next 8 days or so, we can have higher highs inside of the VIX index out there. And what we know about higher highs when you're above the 50-day exponential moving average, not so good for the stock market out here. Hey, you get below 1288 out there, that's the 50-day exponential moving average, then that changes the market. But we've got to use the information that is available to us as we speak right now. So in my opinion, that is what's going on. You've got Goldilocks trying to make a bottom, but that's not in. The same thing inside of silver. Light sweet crude, on the other hand, that is trying to make a bottom out here. And right now today, trading into the top of its descending price channel out there. We got all the indications out here that light sweet crude wants to trade higher, but it has to break the channel. It must break the trend out there. It must break the channel line. And if I were to go take a look at the October contract, do I have it for light sweet crude? I might. Let's put this up on the chart out here. Where are we at in Baz? I'd have to say we're down to a trough F out there versus a G. That's taking a look at the October contract out here as we came into that key reversal session on September the 11th out there. So clearing 94.21 will go a long way to saying that you should see at least a pretty decent bounce inside of light sweet crude. If it just hangs out at this level, it's really just gotten back to the top of its descending price channel. Folks, it is terrific Tuesday. Thanks so much for staying with us here today. Stay tuned for the rest of the day. A great lineup, and look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.